song. Let play again and again and again.
I ain't coming down.
All right, guys, what is going on? Whew, man, it's been a wild day so far, chat. You gotta love when you get the world's greatest entry, but the world's worst exit. So, oh man, you know. But it's all right, man. Can't catch them all. But we'll talk about it. We'll talk about a few things. We'll get into it. And yeah, so sorry, a little bit late today. I thought I was going to have everything done. I was on the phone actually. So I was trying to hurry that up. And it ended up taking longer than I expected. So sorry about that. But we're here, man. And, you know, markets are moving. I did call out some price levels for you guys. 20,343.75, I think it was. That hit. I also talked about 27.43 for gold. That hit as well. So that's 2 for 2 on the bias today. So you're welcome for that. You're welcome. Not even a single thank you in the chat, but it's cool. But it's cool. I don't do it for the praise. All right. I don't do it for the praise. But it's, you know, it's nice to be able to say, hey, I think it's going to go lower, or, you know, will it continue lower? And then it fucking dumps. You know, that's always wonderful to see. So we'll start with gold since we are already here. I don't mind. I don't mind. I don't mind. But drop a like and drop a 1 in the chat if you guys are ready to go. If you're ready to learn something today. Is it brighter today? Is the camera brighter? I feel like I forgot the light yesterday. But I feel like today is bright. Can you see my face, chat? Can you see my beard, chat? Can you see it? Not that that's what's important, but, you know. I at least don't want to look, you know, dark and all that stuff. What's good? G, Marshall, Mason, MJ 2020, Carcel, Juan B, Felix, Capitalist, Crocs, Big James, Allison B, Willow, Nikki. Got to start calling me Cheddar Bob. Oh no, not the Cheddar Bob. Down just under 1%. It's all gravy. We'll talk about it. At least share, taking responsibility. It's what you always got to do. I like it. That's what you got to do. What's good? Toby, Eberneth. Did I miss anybody? Z. I was orange yesterday, huh? Fuck, dude. Should run for office, huh? Nah, it won't happen. It's because of the light, though. And I have a ring light. I just forgot to turn the ring light on yesterday. So, hey, man. I'm not perfect. Ditto. I love how I had Thursday's low as focus and it hit hard. No, very nice. That's good. Yeah. I was orange and yellow yesterday and none of you said anything. Man, you're fucked. You guys are, I hate you. I hate every single one of you. All right, so let's get into the business. Let's get into the business, all right? In the Discord, I talked about this level in here. Okay, I talked about it. But what I tried to give you afterward, when I said, if you want to see something cool, extend that consolidation over. Okay? And there's a reason I said that. Fuck, man, this is hard to explain. Okay, let me do it this way. Let's do this by its individually. Original consolidation, accumulation, manipulation, right? And distribution, redistribution to go lower, below this consolidation. So this by itself up here, and we'll zoom in on that in just a second too. But what I'm trying to tell you is this. This by itself okay, is its own market maker sell model by itself. You guys see that? Consolidation. Excuse me. Original consolidation, accumulation, manipulation. This silver is lower here. Okay. We can drop down to a 5-minute so that way you can see what it looks like. Or was this on a 5-minute I was looking at earlier? I think it was the 5. Okay. So this by itself, meaning buy side price delivery, sell side price delivery. This by itself could be its own market maker model. You see that? and then that would be the opposing, right? Manipulation, seeking, opposing liquidity. So this segment of price, and I'm going to leave this red box here, so that way you understand this entirely can be its own market maker sell model. You guys with me so far? I appreciate that. Thank you. Well, I need some blessings. Break even today. You know what I mean? Fuck, I need some blessings. But anyway, what I was showing here is a reaccumulation. Remember yesterday? Remember we smacked the fuck out of Nasdaq yesterday? Yeah. You didn't forget. That was yesterday. Anyway, that reaccumulation to go higher, that reaccumulation became redistribution. You didn't zoom in on that, did you? No. No, you don't. You don't read, you don't zoom in, you don't do shit. We traded through that here. What's that candle do at 720? Boom. You see that? That's gorgeous. Okay. You want to know how to get entries like me? Well, I'm giving them to you. Nasdaq, I had 1 tick drawdown. 1 tick. Right? I also got stopped out by like a point too. So, but the entry here, okay, that's obviously significantly bearish. We have an up candle here. We have a gap right there too. We'll zoom in on it. Okay. So go look at the time that I told you in the Discord. Are we going to extend down to 2743? I said, are we going to get that? Like, are we going to continue down to that? And obviously we did. Now, I told you that original consolidation, I think I posted a 15-minute. Okay. And I told you to take this and extend it over. Right? Now, why would I do that? Why would I do that? Because now, when we zoom out, you'll notice we have a market maker sell model within a larger market maker sell model. Okay. Original consolidation. We do have like accumulation here. We have another level of accumulation before running higher. Okay. Now this is all-time highs, so it's not really like bumping anything, but that's why I told you relative strength analysis. Silver was lower here. So if this was accumulation on the buy side of price delivery, what would that become on the sell side of price delivery? If that was utilized for buy side, that's going to be utilized for sell side. That's why I said to stretch that over. And now you see, whoop, now you see, look at it, 5-minute time frame. We trade up into it, a little bit lower. We left behind lows. We rally a little bit, but again, that's just back into the original consolidation of the short-term sell model. But that's reaccumulation on a larger buy model. So that becomes an inversion. Why do you think I told you, are we going to keep going lower? Yeah. I got a pretty high strike rate, huh? As far as bias goes, obviously, if you include break evens, right? It's like, oh, okay, well, that fucks up the, the win rate, right? But as far as giving you levels in advance, I mean, it's fairly obvious I'm way more right than I am wrong. This is why. This is why, literally. How do I know if it's going to continue lower or if it's just going to, hit the liquidity and then reverse? Well, why would it hit that and then leave these almost identical lows open? Why would it do that? It wouldn't. I mean, it can, but it's a weak market. You have a sell model here. Would you buy into a sell model? Fuck no. Would you buy with low resistant lows? Absolutely not. Absolutely not. Okay. So you can see here at 8:30, we're going to take that off. At 8:30, we close below that reaccumulation on the buy side. So that candle, 845, trades up and into it. Old accumulation becomes distribution or redistribution because we have a level of distribution up here. So this is redistribution to go lower. Look at that candle right there. It fucking sinks like a rock and then continues lower because what we actually reached for was beyond those lows and into Monday's low. So I didn't tell you that, but I told you 2743 in which we got. So there's a bunch of late entry opportunities in there. So what did you say? So you're telling me instead of just looking at it and instead marking it up, I probably would have seen shorts and then not been a goober. Well, first of all, that's a hell of a question. All right. I'm not really sure what you did, but the whole point is this giant red box here is it's kind of a, shitty, I wouldn't say a buy model exactly, but it's like you have a small market maker sell model within a larger market maker sell model. Does that make sense, everybody? Does it make sense? I would hope so. Now, you really want to see something cool? You really want to see something cool? If this wasn't already cool enough, I mean, it's not like you have anybody that shows you better shit than I do. Maybe sometimes, but not a lot. Okay, you want to see something cool? Real cool? Low resistant lows up to that high, right? Where was that first level of distribution? 25% level. This accumulation turn distribution, that was in the lower end, but this is the premium end of the discount. So is this. See that up candle and that gap here? That's right around 50%. But what do you remember about 50%? Now, automatically, some of you are thinking, oh, price consolidates around 50%. You're right. But I snuck this in multiple streams. I'll tell it to you again. 50% of a market that is supposed to go lower or higher, meaning it's set up to do that, then 50% is it can be deemed fair value, but 50% actually can be a discount. Because why? Well, look at it. If we have low resistant lows and we have manipulation, the market is absolutely going to seek those lows. So 50%, I mean, it's not the greatest, but again, that's like it's one of the last available moves. You had your Y slam up here, you had your low risk sell here, you had your first stage distribution here, short-term manipulation, okay? Or really anything up in here, right? See that up candle here? That got traded through here at 7. What is that candle trading up and into? That up candle here, right there. Look at that shit. You want to learn how to be fucking precise. There it is. Right there, and right there. And right here. Okay, it's all there. You just don't like 5-minute time frames or 1-minute time frames because Twitter says not to do it. And I'm not your teenage mentor. So this is why I can do things that most people can't. Ego is the enemy. But you saw my entry today on Nasdaq. I posted it. I showed it to you. Okay. And, it was only one tick. One tick of drawdown. But this is how you become super, super precise. You have to know where you're at in well, you don't have to, but I would recommend for you to know where you're at in the framework. And the framework is just a short word for MMXM, buy model or sell model. Framework's just easier to say. It's your roadmap. I don't care what you call it. But if you know where you're at in the model, okay, then you know what entry model to utilize You have your premium and discount levels already outlined, and you can anticipate continuations. This liquidity got taken, right? How many of you thought, well, we might reverse here and go higher? And I used to think that too. But it's like, no, we got lows down here. That's going to continue lower. And that's why I posted it in the Discord. Are we going to continue lower? I didn't say we would, but I said, will we extend down there? And how do you think I get to these ideas? I keep telling you guys it's a crystal ball, right? Obviously not. I don't have a fucking crystal ball. It's probabilities. What's good, George? It's probabilities. Okay? So as long as you get in sync, I said this yesterday and time again, it's not even about getting the short up here or within here or here or here or even here. Even the ones down here. The whole point is to get in sync with order flow. Do you understand? That's what it's about. This was also like a mitigation here too. So you have mitigation, right? High, low, higher, high, distribution. That down candle got traded into right there. And then that other candle was an inverted reaccumulation. So yeah, a lot of moving parts, right? Well, it's either you want to be precise or you don't. You want to be precise, learn this shit. If you don't want to be precise and you don't mind drawdown and taking stupid ass trades, then don't study then. But I'll keep posting in the Discord. And I'll keep taking fucking trades that people pray that they try to get. Okay? But, chat, this is why I'm here. I'm here to show you these things, and I'm doing this for free. Okay? I'm doing this for free. So anyway, we'll take a look at silver real quick. And this is what I mean. See that? What time did gold make its high? 3:30 a.m. Oh, London, of course. Of course it was London. 3:30 a.m. Central Time. Where is silver at 3:30? Right here. So what is that? Weakness. Even though it has low resistance highs here, I would agree. But overall weakness. And gold having the lows. Okay, silver's not going to run it forever. Oh, wow, we hit 35 on the future side. That's crazy. Anyway, there's your weakness. Okay, and there's your distribution. Beautiful. Okay, something like that, that can make your whole week. Do you guys, they can make your whole week or your whole week. All right, and I'll let you figure out what that means. Do you guys realize like what this is per point? Like this isn't some like, oh, that's $100 move. Like, bro, this is thousands of dollars here per contract. Do you realize that? Thousands of dollars per contract in here. Just like Nasdaq. Now we can go look at that. You know, even though I broke even on it, it's, you know, I might cry a little bit. But, you know, it's in the Bible, right? Like, there's a time to live, there's a time to die, there's a time to talk, and there's a time to be quiet, right? Well, there's a time to cry too. So that might not be in the Bible, but the idea remains the same. We have this weekly imbalance. We traded to the high end of that last week. We closed off of it. So I didn't really have an anticipation for the weekly candle, but the daily, what have we been doing the last few days? What have we been doing since like October the 10th? So like 2 weeks almost. What have we been doing? What have we been doing? Where has price really gone since like the 9th or the 10th? Where's it gone? Generally speaking, where is it going to? You had one nice up day. You had a really nice down day here on the 15th. But look at these other days. What the fuck is that? These other days, that's an inside day, right? That would have been cool if we took that high. That would have been a search and destroy day. But nonetheless, we have a lot of what? Consolidation. Right, Mason, Allison, thank you. Consolidation. The second video that I ever did for the MLM industry. The first one was like an introduction video. I was like, finally, it's been fucking years. The second one was qualities of a consolidating market. And I taught that in consolidations, price will seek liquidity and typically trade back into the range. So what does that mean? That means there's going to be a lot of reversals. There's going to be a lot of manipulation. There's going to be a lot of, I went long, I got stopped out, or I broke even. You know, price isn't really taking off. It's stagnant around my entry, XYZ. That's what that means, generally speaking. Okay. So you have to realize, okay, we're in consolidation nation. That's just what I call it. It's a cool name, right? So it's like, all right, well, what should we do then? If we're in consolidation nation, okay, we can go down to a 1 hour. Take a look. And the green was just a representation of the last couple of weeks or so, right? There's no real direction. You had a couple of nice moves, like significant moves in a direction, but a lot of give and take, back and forth. We dropped off, manipulation, back into the range. Okay. A lot of like lows swept back into the range. Highs swept back into the range. Highs swept back into the range. So when you look at Tuesday, that was yesterday, what did we do? We swept highs and traded back into the range. So if we took some sort, let me just take this off. If we took buy side liquidity, meaning we took highs, okay, there's some highs right there from yesterday. We took that. Oh no, sorry, this was Monday. We took that yesterday. And that high also took Thursday of last week. Right here. See that? So if we took liquidity on the upside and went back into the range, what are we likely to do next? Seek opposing liquidity. Oh yeah, John, well, fuck. 20,343? Yeah, that makes a lot of sense now. Yeah. What's hard about that? Honestly, what's difficult about that? There's nothing difficult about that. Consolidation nation is going to seek liquidity and usually trade back into the rate. It won't be like that forever. The markets isn't going to consolidate for a year straight. It's not going to do that. But if we've been there for a while, okay, that's the condition that we're in. So what's up here and what's down here? What's that gray box? Oh, John, I don't know. I don't remember. I'm like, I got Netflix on another screen. I'm kind of listening to you, but I'm not really paying attention. I'm kind of just like, you know, fuck it, whatever. I don't know why I'm kind of sassy today. Probably because I broke even and feel some type of way about it. Sorry. Remember, high time frame concepts, we can cut in half. We have a premium end and a discount end. Do we not? Did I not tell you that already? You know that. Check your fucking notes. Okay. So, where are we at? Well, we took liquidity at the premium end of the weekly imbalance, and now we have opposing liquidity at the discount end of the imbalance. Oh, how hard is that? Honestly, how difficult is that? The market trades from liquidity to liquidity. Wow. It's impossible to predict the market. It's impossible. Nobody ever knows. Nobody ever knows. Nobody ever gets it right. Nobody ever calls trades in advance. Nobody ever points out levels before they hit. Nobody. Here's the thing. Because you might be wondering now, oh, well, hold on, John, wait a minute. 20,462 or 463, if you round up, that is low resistance highs. This is bullshit. And now we can get into the heartbreak portion of today's presentation. My short. Man, that was that 420 level, dude. That wasn't my short, but I'm just saying, where's our imbalance at? That 420 level keeps coming up here. That was the short at 1875. Okay. 20,418 and 3/4. That was my short. Okay. I'll even put a line on there to show you. And again, it's in the Discord, so you can't, oh, he's lying, he's cap. No, you're fucking cap. Go look at the goddamn Discord. Right there. That was the short. That was my break even. That was my break even, chat. It was like 16 or 1650 or something like that. Because that was our macro today. All right. I know we're getting a little markup heavy, but, you know, again, do you want to be precise or not? Do you want to be precise or not, chat? But we'll clean it up a little bit. Okay. When you have two imbalances, which one do you trade? You don't have to put your answers in the chat, but you guys should know the answer in the back of your head. You trade the lower one with a stop at the second one, right? Now, why would I short when there's low resistance highs? Why would I do that? Because I'm a G and I do what the fuck I want. No. 20,343, that was not tagged at 1007. This macro looked like it was going to run there, but it didn't. That macro bamboozled us. But I also, when we were in here, I told you, I said, hey, look, I'm still favoring shorts. However, we did leave behind equal highs. Okay. And again, that's in the Discord too. It's all there. I don't delete any of the messages. They're there. What's good, Wes? Yeah, it has been a while, huh? You got your gold sniper though. I like it. These equal highs got taken at 947, 948. Okay. That right there is super important because number one, the macro is coming up. That's your 10 a.m. macro, 950 to 1010. When we look at these equal highs getting taken, okay, ES, there was something in here I saw earlier. It was these equal highs that got taken. Nasdaq doesn't do it. And I guess ES didn't, but it took these short-term highs. There was something in here that was super important. Or maybe it was this high in here. Well, either way, ES fails to take the the equal highs up here. Now we have almost triple highs, but ES has lows here as well. And again, the whole point of today was favoring shorts. So the market did take short-term highs, but left these two as low resistance highs. So that might be something later on. That's why I said I'm going to come back for the PM session in case we get a reversal. We have not. So that's funny. But in other words, I told you I'm still favoring shorts. So we yank the highs, we break down, okay? And we have lows here, and the lows at 343. So that's why I shorted that. I broke even, so I'm like, okay, well, you know, now I want to move to the sidelines. This was the only re-entry there was two re-entry opportunities that I looked at. I did not take them. Okay. What do you think they are? What do you think they are? Actually, there's like three. There's a few. What do you think they are, chat? Talk to me. Talk to me. Amazing short. Stopped out. What were the re-entry opportunities to go lower? Mind you, what I gave you on gold. What did I give you on gold? There was the low risk short. There was the first distribution. There was manipulation. And then we started breaking down below up candles. We started trading into previous levels of accumulation turn distribution. We saw a reaccumulation become redistribution. We saw a lot of nick knacking and penny whacking. You know what I mean? So, in hindsight, I should have kept my stop where it was at, obviously. But look closely, chat. Look closely. You're not looking, and that's your problem. Here's an imbalance here that was respected to a degree until it wasn't. So what does that become? An inversion. Right after I got stopped out, we saw a imbalance created on the way to liquidity. So what does that make this? The imbalance model. That trades right into that, doesn't it? Zoom in, chat. Don't be afraid. Don't be scared. Look at that. Boom. 1008. That's still inside the macro. That up candle gets traded through here. What's 1011 do? If you're a Twitter goober, pay attention. Pay attention. There's an up candle right there. Oh man, that's fucking precise. Yeah. Yeah, it is. How do I know which up candle to use? Inversion here, up candle here, imbalance here. So the imbalance was number 1, up candle number 2, inversion number 3. I had 3 opportunities, or 4 if you want to include like a NCE, like a next candle entry. I could have done that too. So I could have had 3 or 4 opportunities before that big run, and that candle right here just made me cry, dude. I was like, fuck, dude. A 30 something point move on the Nasdaq in a minute. I was like, damn it. And then of course the alert went off and I said, hey, 343 is done. So that's what I missed, unfortunately. But again, you know, I broke even. I mean, it was like, it wasn't nothing crazy. It was like 2 or 3 points. So it was like, what, 40 or 60 bucks? I mean, that's a break even. Okay. I had opportunities to re-enter, but I decided, I was like, fuck it, I'll let it go. So I let it go. Okay. But a lot of people wouldn't see those as entries. Do you realize that? Look, I'm still working on the masterclass video, but what I have shown you here, to me, this is my humble opinion. Okay, if we can use the word humble today. I know I'm kind of all over the place, but in my opinion, this right here, what I showed you on gold and what I just showed you on Nasdaq, this right here is the antidote to FOMO. I know I've been over, I think I went over this a lot last year in 2023. I haven't done too much in 2024 in this regard. The fear of missing out. You're fearing missing moves because you might not wait for the imbalance. Well, fucking wait for it. Or like me, you get knocked out and then it trades lower and then you think the move is over. Oh man, I didn't get the sniper entry. The move is over. No, it's at the 30. It's at 390s. I told you 340s, bro. We still got like 50 something points to go. What are you talking about? What are you talking about? After that, okay, or what about these up candles here put together? That gets tapped into too. So again, that imbalance was an opportunity, or these up candles put together, that could have been an opportunity. So there's 2. And then that up candle, once traded through, became 3. And then that inversion, that imbalance got traded through at 1010, and that 1011 candle hit both the inversion and this up candle. That's like 5 or 6 opportunities in here to go short just before the big move. And that's what a lot of you guys want, right? Matter of fact, one of you did that. I think you got in here and then you got out lower and you didn't get break even like I did, which is fucking awesome. That's good. But like what I did on ES last week, that one trade I told you was like 4 minutes long. I'm in, it syncs to my TP and I'm out. It's like a 3 or 4 minute trade. It's like a super scalp, right? Those are the best trades, bro. 4, maybe 5 minutes long. Oh, dude, those are goated. What do you mean? In the future side with E-minis? Oh, yes, sir. Yes, ma'am. Anything in there would have netted you very little drawdown straight to the level that I outlined like 3 hours before that. Because I said something in a Discord at like 740 or 8 something. It was before equities. I know that. So what did our equities do? Ran us higher. Took some buy side. Fucked around for a little bit. Left equal highs. Dropped lower. Okay. But that low, when we rallied here, what is that low? Engineered liquidity. Remember we talked about that? Yes, John. You always say that. Remember this, remember that. I'm getting sick of it. I'm just reminding you of stuff you already know. Anytime the market stops and just pauses, right? It just so happens to pause right before a higher time frame level of liquidity. Why would it do that? Because bozos who aren't paying attention to what's on the higher time frame, they're going to long in here, which is not a problem. I mean, it does go higher, right? And it jams the equal highs. That could be tradable, sure. But then what happens here? Oh, well, look, there's higher highs and higher lows, and we might make a new high a day. So they're going to try and buy a retracement. Where does their stop go? The low. So there's a generation of liquidity here. That's why in my opinion, that's why the market stops like 2 ticks or 3 points and just turns on a fucking dime. It's engineered, bro. It's a finesse. Like in basketball, when they act like they're going to go one way and then go the other way, it's the same shit. They're going to drop it fast. Oh man, let's get on shorts. Let's get on shorts. Market comes up for your short buy stop. Oh shit, we got stopped out. Now the market goes lower. Right. It's all engineered. That shit's engineered. Those equal highs, that to me, that's manipulation. And then this in here was just bullish order flow to go lower. So had you looked for shorts, that to me was the opportunity. Was in here or in here. And then obviously if you left a runner on, we're absolutely just dominating lower, like 200 points lower, 240 points lower from up here. Look at that. Getting wrecked. Right? Carnage kind of day. But who wanted to be short before equities even opened? Nobody, because nobody can predict it. You know, this is all just luck. You know, I just get really, really, really lucky all the time. All the time. So hopefully, it's been almost an hour already, but hopefully you learned something today. You know, we talked a little bit about like overcoming FOMO. If you missed the first imbalance, if you missed the low risk short, you can go for the first stage distribution. If you miss first stage distribution, you can get late entries on like inverted. I know the chart's kind of flat. If you want to get in late, you can take inverted concepts or, you know, wait for up candles to get traded through and then, you know, trade the up candles. Like, bro, come on. It's all there. But there's these little gyrations all over the place. Okay? Like, let's just take everything off now. Let me show you what I'm talking about. Every candle, okay? every candle has an open, high, low, close. Every single one of them. When price trades outside of a concept, meaning that concept has been disrespected. If you thought it was a bullish imbalance and price closes below that, well, it ain't fucking bullish. And if there's a downside objective, it's going to be bearish. So what I'm telling you is there's these micro fluctuations in price. Okay? And those are how you get entries that you just, your jaw will hit the floor. Like literally your jaw will hit the floor when you get them, because you're just like, holy shit, dude, I'm a fucking trader now. And it's like, well, that's what you're here for. This is like the general market maker sell model. Okay. Even though it looks like a head and shoulders pattern, that's not what it is, but I'm just trying to give you the understanding here. You have a market maker sell model. Okay. But what I'm saying is you have these tiny, tiny up movements before going lower, or down movements before going higher, right? In other words, like let's say that liquidity run here, the market goes lower to ultimately go higher. Okay. So when we're bearish, the market goes up just to go lower, up to go lower, up to go lower, up to go lower. So these micro retracements, okay, meaning just the tiniest move against the overall direction, those are the hidden gems. Those are the hidden entries. Those are just ways to enter the market like a ninja. Do you get what I'm saying? It's hard to give you like a visual, and I'm not really going to use any analogies here, but look at it from that perspective. Okay. And I look, I'll give you a couple examples and we can, you know, we'll shut the stream off and I'll see you Friday. This is what I'm talking about. When you have a potential mitigation, okay? This right here is what I'm referring to. The parameters, let's just use lines instead, or we'll add lines on here because I really want you to see what I'm talking about. That is your low end of the mitigation based on a 5-minute time frame. And this is your high end of the mitigation. Okay. How did we get that? Remember, high, low, higher high, all-time highs, and then also silver was lower. So that's distribution. Okay. So when I'm talking about these micro fluctuations in the opposing direction of where price is going, meaning if we want to anticipate lower pricing, we expect up movements or even deep retracements, sure, like in here, because you have some highs here that got cleared. But the micro fluctuations in price that I'm talking about is right here. I showed you this earlier, but I like, look, bro, really fucking understand this, okay? It trades on this 5-minute time frame. It trades through the mitigation. It closes right through that here. Okay? That down candle, you can see where its closing price is. It is, that's a horrible brush. There we go. That's beautiful. It closes right there. The next 5-minute time frame, where does it go? It just so happens to trade up and into 2762.7. It trades a little bit beyond that, but that's that micro fluctuation that gets you in to go lower. Okay. And what I showed you in here as well, same thing. This up candle here, we have a gap. The up candle here gets traded through at 740. And then we see another down candle here too. Either way. So if the higher time frame is bearish, we want to wait and short as price is going higher. So it's a micro fluctuation in the opposite direction. And that's why these up candles, right? If price is bearish, it's going to be respected by up candles. How far can price trade into a candle like that? There's a gap right there. And where does price stop and turn on a dime? At a gap. It's a micro fluctuation higher to ultimately go lower. Does that make sense? So hopefully that gives you a unique perspective to not miss trades. Because you might think, okay, I'm looking at this level like a mitigation. I'm a little bit scared to short because, you know, I'm not used to this. You know, let's wait and see. Meaning, like, for those of you that were in London this morning, because some of you were trying to short up in here, which is great. And you might not think, well, I don't know, you know, what if it comes all the way back up here? But then you see manipulation. We trade through it. It's like, oh shit, price is printing down candles. That gives me confidence. Okay, now I'll short the mitigation. Where does your stop go? It could go to the high end of the mitigation because remember, these highs were cleared already. And that up candle was respected too. That's a micro fluctuation in here too. I think I showed you that earlier. That right there. Not this down candle, not 7 o'clock. I'm talking about 7:05. That 7 o'clock candle closed below the up candle. So this candle, that micro fluctuation higher, that little itty bitty like 2 or 3 ticks higher, that's a short. Okay, or even in here, that's a short. All right, that's a short. You can say, okay, we have highs cleared, up candles are being respected, and even though I'm a little bit late, I've been given evidence. We have a breakaway imbalance up here. We have manipulation here. We got bearish order flow here. Okay, cool. I've seen enough, I don't know, confirmations, right? How many do you need? You've seen enough to go, oh yeah, we got equal lows way down there. We have a consolidation here too, but we're way up here. We're in a big premium, aren't we? Right, because remember, I showed you this earlier, the equal lows, which is, or the low resistant lows, which was the initial target that I gave you later on, because I wasn't up for London. You're in the premium of the premium up here. You're at the 25% level. That's where you're going to find what? Your mitigations and shit. Oh yeah, that was in the MMXM video. It's in your notes already. Yeah. Right up there. So after that, you get signatures like, oh, okay, what has needed to take place has taken place. Now I can get in sync with bearish order flow and won't be scared to feel like you're entering late, because on a small time frame it looks late, but on a larger time frame you're early. You guys see that? So drop a like if you guys got some value today. If maybe you learned how to not be fearful of missing moves, right? If you don't get the manipulation, you can get the up candle. If you can't get the up candle, you can get the mitigation. Can't get the mitigation, you can get a later up candle. But once you get around that 75% level, you know, that's a little bit shaky. But that still worked in here. That old accumulation turned distribution to continue lower. Okay? So this is the kind of stuff that people did not tell me. Okay? I had to learn this by taking horrible trades, by watching price, and really, really sitting down and saying, what am I doing wrong? How can I fix it? Where are the real opportunities? And like, this to me is what's better than this? I mean, honestly, show me a person that took a better short on Nasdaq today than I did. Even though I broke even, I fucked up on the trade management. But my entry, who got a better entry than me today? Nobody. Not a single soul that you know got a better entry than me. Because I only took one tick of drawdown. So there was somebody out there that took a short one tick above mine. Sure. But who? Who was it? Nobody can say, oh yeah, John, I got a better short in that imbalance. Maybe you entered higher than me. Yeah, that's fine. But I'm saying, like, in that segment of price, you probably entered later than I did. But I'm in with one tick of drawdown on Nasdaq, on NQ, right? And that's why. So hopefully you don't think that I'm an asshole because I'm like, you know, I'm saying like nobody's getting better entries than me. But it's like, fuck, dude, who is? Let me know. My Instagram is open. My Twitter is open. Like, you can message me and say, hey, yeah, man, this guy got a better short than you. Let me know. I want to know. But I'm also trying to tell you exactly how I get them. And they're not always like this. But when you're in sync, these tiny micro fluctuations are going to get you in on some disgusting entries, bro. Oh, silver down 3%, almost 4%. Oh, fuck. That's what I got for you today, man. That's all I got. You know, higher time frame premium disc or higher time frame conditions, okay, and then lower time frame levels of liquidity and getting in sync with order flow. If you know where the liquidity is and you trade in that direction, you're fucking golden. Do you understand? You are golden. Where's the liquidity? And entering in the opposing direction. Meaning if you're bearish, you short on the way up, not usually on the way down. Or if you're bullish, you enter on the way lower, not on the way up. Okay? Toby got a 0 tick. DD, I guess, is drawdown. Short on ES. Ooh, post that in the Discord, Toby. I want to see it. And if you did that, then good job. That's good. That's good stuff. But yeah, the markets are heavy today, and I'm done. You know, I'm not going to look for reversals. I'm not going to try and look for a run up to these triple highs. I don't think it's going to happen today. The markets look very, very heavy, and I see no reason why we would turn and do that. Okay, we have a fat down candle. We have one of the fattest down candles in weeks. In weeks. The last time was September 6th, right? This is a huge, massive down day. Who else was bearish? I'm sure some people were, but I'm just saying, like, I gave you the bias of short before the equities market even opened. Before the 8:30 bell even hit ding, 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 ding. Before that, I gave you 20,343. And you would have been on side had you been shorting on the way up, not on the way down. Okay? So, with that being said, that is what I will leave you guys with. So, I don't want to, you know, try and do stuff too far out, but 724 is like daily equal lows for ES. So we might end up not being too bullish for a while. So I think it's a little bit too early to tell. I don't think we're going to get that today, but that seems like a high probability target for something later on. So you heard it here first. 1023 2024 5724 is equal lows for ES, or low resistance lows for ES. So that's going to be all, man. Y'all be good, be blessed. We will be here same time, same place on Friday the 25th. I will put out the market review tomorrow on Thursday. All right, we'll go over some stuff, and it'll probably be a longer review. I know Tuesday's review was short, but I did that on purpose because I'll tell you this too before you go. I saved, let me look at this real quick. think it's the membership tab. I added yesterday's stream and Monday's stream to the members only videos playlist. So the trade opportunity review and the stop loss study exercise, that study exercise was near the end of the stream. And then the one from yesterday, we went over the low risk buy and the reaccumulation study, which I gave you the reaccumulation before we went higher. And then I don't really see a reason to save this stream today. I mean, really, I guess the biggest focus is like the micro fluctuations in price, like entering on the way up when you're trying to be bearish. Even though I was 2 for 2 on the bias today, I guess I just don't see a reason to save this one, but the other ones were saved. So that's why Tuesday's market review was short, because I wanted you to go back to rewatch the Tuesday live stream, if that makes sense. So that way you can actually watch price fluctuate in, even though it's a recording, it's like real time. It's not bar replay or market replay where you're just seeing the candles print. You're seeing those micro fluctuations that I'm talking about. Matter of fact, that's what you should do. That's what you should do. Take what I gave you today, these little micro fluctuations, right? And then go watch Tuesday's live stream and see what I'm talking about. Like, oh yeah, that's a small time frame mitigation, but we're overall bullish and it trades down. And it's like, that's the buying opportunity. You know what I mean? But I gotta go, man. I am starving, dude. My stomach is high-fiving my backbone right now. Like, I am so hungry, I can't even think straight. So we'll be here same time, same place on Friday. I'll put out the market review tomorrow. But go check out some of the previous live streams that you have not watched all the way through, or to get a rewatch. And I think that is going to be great benefit. All right. Or go read. God, you guys got to read Meditations. You got to finish it. Okay. Do both. Watch the stream and then go read a book, and then all will be well in the world. All right. See you guys on Friday.